Good afternoon, good evening. Michael Map here, Map Investments, bringing you another video. I haven't done one in 3 days. My last video, I mentioned the bear market was here. This video right here, 3 days ago, a whopping 10 views. Wow, killing it. Um, 318 subscribers. Thank you for all subscribers. Um, but yeah, there wasn't much to do in the last 3 days. And in this video, I mentioned to raise cash and just stay engaged. You gotta stay engaged and study and watch the market and respect the market. Market takes no prisoners, and you have to pay attention. And obviously, the market is in a downtrend. Um, so, where do we begin? Let's start with. Let's see here. I got logged out of here. So today, um, let's start with the dollar. So commodities are all pretty high, and what's pretty amazing is that usually the dollar was high today. Usually, when the dollar's higher, commodities are lower. And I don't want to see when the dollar declines what's going to happen to commodities. So I think it's kind of like an illusion what's going on with the dollar, because when you go out to the stores, you really can't buy much. Um, they actually hit oil today. I think there was some news that OPEC was going to, not OPEC, the Saudis were going to see what they were going to do production wise. I don't think it's going to do much, but that's just my 2 cents. Oil's in a bull market, and a lot of the commodities are in bull market. Um, So yeah, bear market, that's what I talked about. If we go over here to FISBIZ, it tells you here year to date where every future product lies. Except Bitcoin. I don't think they've added Bitcoin here. Anyways, lumber's down 48%, which should be good for housing and anything that has to do with wood lumber. Um, I know I heard on CNBC that housing, there's about 800,000 houses, new construction, but that traffic has completely slowed down from 1 month to the other. Interest rates are like at 6%, more or less 5.5 to 6%. So they've gone up a lot, and that's refinance. Not even Let's not even talk about refinance. Redfin is firing people. Compass let people go. Banks are letting people go. The refinancing, the applications, mortgage applications are falling off a cliff. In regards to purchase, we shall see. I think location is a very important factor in regards to the real estate market and housing. Some areas might go down more than others. We will have some correction, but I don't think that we'll have a huge correction unless we really get a really big full blown recession, which should be here. We just need confirmation on the next GDP to make it official. But to build a house, it costs a lot of money these days. So um, that's why I don't think they're gonna go down that much. Um, they can, but it's gonna be tough. Like seeing houses at $300,000, 250. I think those days might be over. We shall see. We shall see. Unless we get a big recession and a lot of people lose their jobs and can't make payments on their houses, and then we have a big wave of foreclosures, then yeah. But delinquencies aren't big. Based on the report that I saw today on CNBC, um, didn't see much on the foreclosure front. It's not like that 2008 in regards when you compare numbers to numbers. But anything's possible. History tends to repeat itself. I wouldn't be a buyer in this market. That's just me. Think real estate is an equivalent of rent. If it doesn't make sense when you buy it to rent it, then it doesn't make sense. Just like a stock. So um, that's just my 2 cents. And if you don't get a return, and let's say you buy it cash, you gotta get a good return on capital. So if you buy it for 300,000, you're getting $3,000 a month, and yeah, 10%. That's great. But then you got to worry about maintenance. You got to worry about the renters, and it's a whole different ballgame. It's a little bit more expensive right now to be in that. And these kind of economic times, if you look at history, I'm not saying we're gonna go back to Great Depression stuff, but in the Great Depression, people their biggest expense was food and energy utilities. and you know, rent and housing was like on the bottom of the scale. So that's my rant on housing. The Nasdaq's in the bear market down 30% year to date. That's year to date. I don't know what it is from the top. I'm just telling you year to date. Uh, Russell 25, S&P 22. So all these three indexes are in bear market, and I think the Dow Jones will get to bear market territory. It's only three percentage points away from bear market. Bonds. So there's really nowhere to hide except commodities. And I think we're going to have a commodity super cycle. Bonds are down. Bonds are getting crushed. So you can't go to fixed investments and you can't go to the stock market. So, and if you do go to stock market, I think you have to go to what my prior videos are about things in the agricultural sector or in the commodity sector, in the oil sector. That's what the graphs show, and you got to respect that. I wouldn't be a bottom picker here. I would wait for confirmation on a lot of these things. People may think it's a deal here and there. I guess so. I mean, it's up to you. I rather respect the trend than go with the trend. I still do my 401k. So basically, if you have a 401k and let's say you have $100,000 at the beginning of the year in your 401k, you're probably, and it probably mimics the S&P 500 and maybe let's say a 30-year bond, you're down 15 to 20% on that. So if you're down 20% on your 100K, you're down $20,000 on your 401k. So people, you know, Americans are frustrated with the inflation. They go up with gas, it's hundreds of dollars. They go to the grocery store, it's $100, hundreds of dollars. And they open up their 401k statements and they're able to save. At the end of the day, they have something left, and that's down as well. So it's really tough. So subscribe and watch the channel and educate yourself because that's what I do. I study and I'm passionate about this. And I'm always looking at the market. And that's what you're supposed to do. Um, you have to be engaged. If you're not engaged, you just might as well just hand your money over to a passive investor if you want. And I think we're heading to an era. Uh, I want to say maybe the next decade. I want to say with the Fed tightening, which I don't think they're gonna be able to tighten like they said that they are. I think they will pivot and they will eventually cut rates when we get into a recession and things get worse. Um, but for stock pickers, for people who are engaged and follow the trends and respect the market and have the rules, um, I think you could do good for yourself. And we all need that in today's environment. Copper surprisingly is down 10, but copper is an industrial metal, and that's why silver is down 7%. Um, Gold is pretty flat, which, in my opinion, gold is the most stable asset on the planet Earth. And then we have all these metals here in energy that are doing great, and we have the foods and everything that we use every day um, is higher, and that needs to be your investment thesis. Do people need this? Do people need this? Do people need to go on a cruise? No, they don't. If things get tight, they don't have to go on a cruise. They can just hunker down at their house and get some food at the grocery store and watch their TV or stream or whatever it is that they're doing. Um, so it's very important to keep that in mind when putting your money to work. There's not much to talk about in regards to stock picks. And I give you my favorite picks right now because I know them by heart, and there's not many setups out there. Because remember, I do this all day. I look at the markets. Besides my job, I work from home remote, and gives me the ability to have the TV on and look at the ticker and listen to the economist and laugh. And I study and on my free time. And if you haven't read a book, there's a book by William O'Neill, How to Trade Stocks. It's on Investor Business Daily. A lot of good rules there. I have it an audio book. I recommend it's good. Um, and always getting into different platforms and stuff like that and learning. Like they gave me a free trial here with VectorVest, so I'm trying this out. And I like to try things out. This is my favorite stock right now, RCMT. I'm not your typical investor. I'm not looking at When you pull up the bar chart, that's my screeners for Investor Business Daily. But like you look at the market today, and everybody's buying Revlon. So like it's become a gambling parlor. You know, Revlon's talking about going bankrupt, then somebody's gonna buy them out, up 100%. And you know, there's so many of them. There's Redbox, there's the GameStop and AMC. That's all gambling, man. I don't care what anybody has to say. That's not investing. And that is not trading. Unless you're doing options, there I can have a little bit more respect for you in regards to derivatives trading and doing credit spreads and stuff like that. Or maybe, you know, futures are a little bit less probabilities when you're trading futures. I personally like options and spreads better, define risk, especially in this environment. Um, that I can respect a little bit more if you're doing trades like that. But if we take a look at the most active options, you had Apple number one today at 131. Now, Apple, if you look at, and these are guys and platforms that tell you, they say Apple's a sell right now. Apple's a sell right here. And they say that Apple fair value is, let's see what Apple fair value is. I'm looking at the mobile app. I just got this app, so I don't know exactly how to. I need to schedule, like it says, their training session. I like to do all that stuff. But Apple, for example, says sell, and it says a fair value for Apple is 107. That's what it says here on their mobile app. And then this is Market Smith, another tool. 107 will put it over basically right here in the last cup. Right here, 107 would be right here. That's what they're saying. But you can obviously see the trend. The I want to say this red line is the 200 day. I'm not sure. Don't hold my feet to the fire. But the 200 day, no, the I wish I had a legend here. It would tell me chart legend. Let me see here what it tells me here. The red line is the 50-day moving average. So I just learned something with you right here. And the black one's a 200 day. So I had it wrong. So the 50-day crossed the 200-day. That's not good. You got an RS rating of 60. So you got to respect that. So you wanna wait till you get a confirmation back up to the upside. And that's a reality. You don't know. You don't know if Tesla comes out with the phone and Apple. I mean, Apple's huge. Don't get me wrong. I'm not saying I don't like Apple. My 401k has that. I'm just telling you that you got to respect these trends. And most of the charts and trends are lower. There's not a lot of setups, and that's why we're in a bear market. Tesla sell. So, and if you want to try it, go to VectorVest, plug in, get that, download the uh, the platform, and then play with it. Play with it with some stocks. I'll tell you some of my favorite stocks that I currently have that I think my 401k won't have. Um, RSMT is one of my favorites. I have PVL. Let's see what it says for PVL. PVL right now it's a hold, so we're getting right here to that line, um, which I think is the 50-day line. Yeah, stayed above the 50-day line, which is a good sign. And the 50 days above the 200-day, and we have a RS of 99, which is showing strength. This is a royalty trust for oil for you folks out there. Genie Energy, there's a lot of talk about energy crisis. These guys are getting into renewable energies, and they've turned the profit the last 2 quarters, pretty good significant profits, and it looks like a nice uptrend here. We're a little bit above the 50-day, and the 50-day did cross the 200-day and RS of 97. And those are the things you gotta look up. Look, if you pull them up here, let's see, Genie. I think they have Genie as a hold. They have it as a hold, but they've gone from buy, hold, buy, hold, buy, hold. Um, Hudson Technology, HNRG. I really like HNRG. They have it as a buy. These guys do coal, and they're about to fire up their own plant, completely undervalued. Um, buy, I would have buy. A lot of my stocks I have buy. Bore drilling, self storage. LI is a Chinese uh, EV maker, which actually they have them as a buy. I think yes, buy. It was up today. Uh, it was up today $1.71. Huge, huge volume. It's actually kind of breaking out because 31.91 was kind of the high here, and you can see a little bit break here, 33.50 on huge volume. So, and we're seeing some. If you look at these bars here on the bottom, you see a lot of buying since the 18. It's gone pretty much buying, but you're getting confirmation, and you still need the 50-day to go over the 200, which I think it will. I think this stock might see highs. I think it could be a leader in the next run up, in the next big rally. I think because we'll eventually get a rally. Um, MTR is another one. MTR is a royalty trust, and it's buy. And it's right at the moving average almost. It's pulled back, so TRMD. And I try and follow these rules. There's a couple that I've kind of like. I'm kind of like adjusting my rules because I don't want to let them go because I'm really confident on them. I'm down more than 8%. I try and let them go at 8%, but when you have a $5 stock or a $4 stock or a $6 stock, I think you have to just a little move is greater since it's a low price stock. So I think you have to give yourself a little bit more leeway. Um, TRMD is a hold. WTI, one of my favorites, had a huge run up. I mean, huge. Look at this run up, big run up. And I think they're going to be having cash flow. I was listening to a conference call. They're going to have cash flow positive here shortly, and they did a big deal with the Koreans. Look it up, read the news. But I think I think you buy this dip. I'm up to on WTI. I'm down. I'm up to 600 shares. I would like to get to 1,000 shares. I would like to be about $5,000 to $6,000 uh, into WTI. I would like to be there because I think that we can uh, get to old highs. That's the 5-year chart. See, I think we're in a bull market in oil and in energy, and I think it's not going away because I think what happened was when the Fed printed all this money. So when the Fed printed all this money back in the day, it went to the dot-com boom, and then the dot-com boom blew up, and it was another crisis, and the money went to the housing market in '08. And then after the housing market, um, we did have a little bit of an oil bump there. Um, then we have the Bitcoin bubble. Well, not well. Basically, now with this last round of printing, we had the everything bubble. But I think so. Where I'm going with this is when they printed all this money, I think this money went to SPACs. A lot of SPACs. A SPAC just went bankrupt the other day. That came out. It was an EV maker, completely bankrupt. They went bankrupt. I think you're gonna see all these SPACs go under. You're getting pressure. Uh, you're getting pressure on. Not that they're gonna go under, but if they're not making profits, the money's gonna dry up. You know, they're not printing. They're gonna raise rates, or they're sucking up the liquidity. You know, the money's gonna go to where where it's not a malinvestment. In other words, where it's needed. So right now we have an underinvestment in the energy sector. That's what's going on. It's common sense. You got the administration now saying they're going to give fuel stamps instead of food stamps, fuel stamps. So it's an ugly scenario, and you can say it's the war. I don't think it was the war. I think oil was heading this way anyways prior to the Ukraine and Russia war. And I think we're gonna be stubbornly high oil prices, and this, you know, it doesn't have to be $100. At $80, these guys make money. So, but if you look at this chart, we got a nice uptrend here, and we broke this here, this line right here. We broke this here, and you see here it says buy. So I agree with this assumption here, and I'm an accumulator of WTI. I heard their conference call. I like what they have to say. And I think we can see these old highs here. I think we can. If you look at their earning estimates, $1.56 for 22 and $1.67 for 23. They haven't seen that in the last 10 years. And we put up the weekly chart. Here's the weekly chart. That's $10. We didn't get to $10. We almost got to $10 and it got hit. We like in a lot. If you look at the 5-day chart on this stock, you'll be like, "Wow, micro, this is nuts." Let's pull it up so you can see it. WTI. It's a little slow. Let's pull up the 5-day. Mind you, oil got hit hard today. 5-day chart. Look at this. I think it was higher than this, but yeah, it was 878. We're down $3, over $3 in 5 days, and the fundamentals are still intact. Here's the 10-day chart. Here's the 10-day chart from 915 straight down. But if you look at a longer term picture, you have a stock that's rising. Couple cups here, a breakout, a little pullback, shake and bake, and you know, I think it's going out higher. Management owns 34% of the stock. The management owns 34% of the stock. Here's the monthly. So here's the month. This is like a big macro view. So in '05, these guys were at $20, got up to 60, and then it crashed down to 7, and then back up. And I think we're heading higher over the long haul. That's just my 2 cents on that. It's one of my favorites. Uh, I like it right now. I mean, it's one of my worst performing, but I think it's gonna come back up. Uh, Southwestern Energy, NC, it's basically all energy. OBE, gas, TWI, they make ag tires, WWE, wrestling, Ring Energy, uh, PHX Minerals, and that's pretty much it. These are some of my favorites. I'm just adding shares on these as much as I can. Um, and what else? 22 minutes. I think I've covered everything. I'm gonna go through the futures, give you a good take of the futures. Um, the 10-year, three and a quarter. We're down a little bit today. We talked about the dollar, all foreign currencies down. Bitcoin at 20K, just trying to hang on to that 20K. A lot of talking about malinvestment. Coinbase letting people go. Crypto.com. There's a bunch of hedge funds blowing up. There's a bunch of stuff. They're already saying it, cold winter in crypto. And I told you in my videos that I didn't believe in that fairy tale. Sure, I wrote the cold winds when everybody was home and the stimulus packages. And it's sad because you look at some of my old videos, the one that has the most views are like piece of shit coins that it's just garbage. It's sad. It's sad. Um, but whatever. Oil got hit hard today. I think energy will bounce back. That's just me. S&P, we're still in a bear market. It was up a little bit. Gold, 1850, had a big run up, pulled back a little bit, but it had a big day on yesterday, Wednesday, one of those 2 days. Um, the feeders, all the meats were higher, and a bunch of cows died in Kansas. Because of the heat supposedly. So maybe not heat prices, meat prices are gonna go higher. Um, Copper we talked about. Now copper's a leading indicator for the economy, and if copper falls on, we haven't seen copper under 4 since I've been doing videos. Um, that is that Mr. Dr. Copper is a believe it or not, and look it up, a recession indicator, uh, because it is a big metal for building. Is copper a recession? Let's see, indicator. But even though if you listen to Freeport McMoran's, which is one of the biggest copper miners in the world, they talk about tough uh, tight markets in copper and stuff like that. Um, Dr. Copper, you see. Um, Anyways, keep your eye on copper. I do your own research, but I know copper, from my experience, is an indicator for um for recession. Um, what else? Nasdaq was up some. Yeah, maybe some value. People looking for some value. Whatever. It is what it is. Dow Jones flat. Natural gas got hit hard. I think natural gas will go back up. I think the trend is your friend, and I think you're gonna see it go higher. I think silver is one of your most undervalued assets in the world. And I think gold and silver will see big rallies. Um, um, I just don't know when, but I have bias, and I'm a metal bug when it comes to silver and gold. I think they're real money, and I think they keep you safe, and silver is needed in solar and phones and everything. So big fan of that. But it could be manipulated on paper. You can't buy silver at 21 bucks. When I go buy silver eagles, you can't buy it at 21 bucks, the physical stuff. So you gotta pay attention to that stuff. At Max. Let's just go buy a silver eagle so you can see what I'm talking about. My computer's a little slow. I got so many things open. Uh, so silver eagle right here. So it's come down a little bit. Well, actually, you can't even buy it for 34. You gotta buy like 5,000 ounces. You buy 20 ounces, for up to 20 ounces, you gotta pay from 37 bucks. So 37 is the cheapest you can get for 20 ounces. So forget about that 22 bucks or 21.50 crap that you see there. And these are the coins you want to buy. Um, I mean, you want to get 35, you got to buy 1,500 ounces. Good luck with that. Might as well get a wheelbarrow or a Brinks truck if you're gonna buy that many, but whatever. Um, the grains were down a little bit, but they're at all. If you look at the charts, they're higher, and bonds are crashing, and that's pretty much it. I think I've covered everything. Have a beautiful weekend. Happy Father's Day if you're a father. And I might do some individual stock picks, but obviously you're looking at my portfolio there. Um, I have some cash on hand, and I got a lot of time on my side, but I'm sure my 401k is not buying these things. They're probably doing what the regular Joe or everybody's trying to do, is catch falling knives, and I don't agree with that. But whatever, it is what it is. I look for the ones that are gonna have a bright future. These will have bright futures. I'm not saying they're not, but they're conglomerates. They're huge companies. They're in my 401k. Why would I overlap? If I got extra capital and I'm doing homework, I'm gonna look for stuff that that I think my homework will prove me right in the end. And we shall see, because these videos are here and archived. Anyways, take care and stay safe. Bye bye.